Well, it's the biggest bubble in history. And now we have a new theme, the AI, the data centers, and all that. Are these companies and their technologies going to revolutionize the way the economy works, efficiency, operational advantages? Absolutely. Just like the internet did, just like the railway did, just like lots of technologies, even the fiber optic build out of the late 90s. But along the way, there was massive overspending in certain areas. Certain companies got way over their skis that no longer exist. But in the end, the technology remains and we use it every day. I use AI agents more than I use Google for simple searches nowadays. But what's my ability or what's my wantingness to pay for these services is a certain price point. But these companies, they continue to just spend massive amounts of capex each week. We're going to focus here on NVIDIA. I think NVIDIA is a great company. They are killing it, but how far and how quick they've come in terms of fiat market value speaks more to the mechanics of what the passive investing machine is in U.S. equities right now and how much liquidity indiscriminatory goes into that index. The S&P 500 approaching 6,800, making a run at that round number of 7,000. We are in a bull market, no doubt about it, and it is in that debasement of the currency as the tailwind for that. But a lot of that has to do with just the mechanisms of the machine. The machine looks at volatility, low volatility, it deploys capital into the market, and it replicates the market index based on the weighing of those names in there. NVIDIA now at almost 5 trillion US dollars represents about 7.5% of the S&P 500. So when equity holders in terms of hedge funds, passive fund flows, pension funds, they want to replicate that, your Vanguard, your BlackRock ETFs, they go in and buy those individual names to replicate their weighings in the stock market. So it's a constant bid. And then you have companies also buying back their own stock like Apple, etc. If every day there's a bid for 2 shares to be bought, but there's only 1 share for sale, what happens? The price is going to go up. And that's what we see with this massive run-up in these type of names. It's a product of the flows in the machine. Like I say, NVIDIA has a 7.5% weighing now in the S&P. Amazon, Microsoft, Tesla, they're the ones that really drive that round number in the S&P going towards 7,000. Constant bids for those big mega cap names when they're not always enough shares available. The machine doesn't ask questions of what's available and what's the price. They just buy. If they have an order every 2 weeks, every month, you're contributing to a pension fund, a passive index fund that buys the market, automatically that's a bid that goes into market. So that's what we're seeing. Is it a bubble? Well, arguably in future time, we'll be able to look back and say how big was it. But when you have one company that creates chips for the new technology world, which is AI and data centers and all that, is now more valuable from a fiat market cap standpoint than every single company in Canada put together. You got to scratch your head and say, something's not right. But that's not a catalyst to change this around anytime soon. This could go on for a lot longer. Just to be aware of, just to have a look back in history, 98, 99, into 2000.com crash, there's a lot of similar behaviors playing out here. Canada is a great resource-rich country. We produce a lot of oil and gas, a lot of minerals, a lot of essential minerals, railways, agriculture, etc., forestry for the entire world. Arguably, without Canada, you wouldn't have NVIDIA. You wouldn't have NVIDIA's ability to operate, manufacture chips, the power sources for it, etc. But that does not mean this needs to change over anytime soon. Expensive gets more expensive in a bubble-ish market, and you want to continue to be long in that bullish trend until it's not. But when it cracks, you need to get off that train quickly. But Jensen Huang, he is really captaining the ship here now, and the U.S. equity market is so dependent on NVIDIA, on Microsoft, these big mega cap names. The feeling to me, looking at markets, studying them for so long, a 5% drawdown here at these elevated levels would feel like a 15-20% drawdown just 4 or 5 years ago. A 10% drawdown would feel like a crash. I don't think the market, but more so the central planners, could handle such a drawdown. They would come riding to the rescue very quickly with all kinds of bazooka-like measures to keep the stock market bid, whether that is an artificial bid or an actual real bid. But when you have so much wealth concentration inside of these few companies here now, the stock market is so vulnerable. Think of it like your Jenga game as your kid. You keep moving the blocks from the bottom of the game up higher, and the tower gets less stable the higher it gets. That's what you're looking at when you're looking at these companies. But another thing to look at is the actual math inside these companies. The Amazon, the Google, the Meta, the Microsoft, they are the big producers of this bubble, and they are the continuous buyers of these chips and the build out of these massive infrastructure plans. However, you look inside what these companies are actually building, they have a useful life they're extending on these chips to 5 to 6 years out. It's basically an accounting gimmick, when we know in reality that these chips, after 2-3 years, they're no longer relevant. They're obsolete. They're like the rotary phone or like your own cell phone. Apple rolls out a new phone every year. You need to have upgrades inside of these data centers. But on the books, they're saying these chips are going to be good for 5 to 6 years. When in reality, that's not really what meets the sniff test. Oracle really hasn't been a cash flow positive company in years, and they have been a big beneficial of this data build out. Some data here out of a group that focuses on the semiconductor space, and they kind of broke it down on like the forecast of what they're saying, the chips in service currently and for the next 5 years, the hosting cost, electricity costs, kind of stable, like assuming stable electricity costs when we have a massive copper deficit, which I talked about last week, and there's just not enough infrastructure built out there. It doesn't make a lot of sense to me. But then you look inside, the depreciation costs constant across the next 5 years, arguably that is not accurate, and it probably all gets front loaded in the first couple of years. So the profit before tax that these companies are putting out is really an artificial number if you're looking at the real math behind it. You got to say, reader, the chips are only good for a couple of years, which in case they always need to be constantly reinvested, more money deployed back inside the data centers, or the AI doesn't scale quite like we're depending. So you can't have one without the other. Something doesn't reconcile there on the forecast if you look at it from a math standpoint. The models. Then you have Meta coming on, and they want to one-up Apple and say, we're going to spend not $500 billion, we're going to spend $600 billion. And you just keep throwing out these big round numbers and gets everybody's attention, and no one really stops to question it. But if you look through the lens of those Mag 7 names, their whole book value combined is roughly $1 trillion basically here now. So, like, how much more can they get to spend and spend and spend, and how far out front is the market on some of these expectations? Eventually, the rate of change slowdown in these companies, when it does come, when the revenue stops increasing, when the profitability stops increasing, that is when the rubber meets the road and you see a correction. That doesn't happen this quarter in Q4. It probably doesn't even happen in the next 6 months, but it's going to come. Just look back in the late 90s and how there were skeptics out there then looking at the fiber optic build out, how like some of the numbers that were being thrown out there just don't make sense. And even some of these fiber optic channels that were built back then are still vacant today. They haven't really uptook how much capacity was put to that infrastructure in that sector back then, which ultimately led to the big crash of the 2000s. A lot of this stuff currently is being financed by the cash flow of these companies, but also a lot of it is coming from off balance sheet. So it's not really showing up as debt on the inside balance sheet of Apple, Meta, Microsoft, etc., which sets up for an even bigger bubble. Think of like the asset-backed lending bubble, the residential mortgage bubble back in 2006, 2007. Some of that is starting to play out here inside of this lens. Like I say, this is a great meme here from Harris Copperman, a.k.a. Copy. I'll put a link in the bottom of the comment section. You can read a great paper he wrote on this. But I just wanted to say, like, I'm a contrarian and a skeptic by heart. Short selling before it was obsolete with today's regulatory issues was one of my favorite ways to trade, but don't do it anymore. But like, you need to step back and say, yeah, we're in our bullish train. We are in a bullish market, and it's all through this lens of debasement. But some of this stuff is just really getting very frothy in the mouth, not to have a real bearish concern immediately, but something to keep in the back of your mind as we continue to get bigger and bigger in this market bubble. That's what I got for you today. Have a good one. Is it a bubble? Well, arguably in future time, we'll be able to look back and say, how big was it? But when you have one company that creates chips for the new technology world, which is AI and data centers and all that, is now more valuable from a fiat market cap standpoint than every single company in Canada put together. You got to scratch your head and say, wealth concentration inside of these few companies here now. The stock market is so vulnerable. Think of it like your Jenga game as your kid. You keep moving the blocks from the bottom of the game up higher, and the tower gets less stable the higher it gets. That's what you're looking at when you're looking at these companies. But another thing to look at is the actual math inside these companies. The Amazon, the Google, the Meta, the Microsoft, they are the big producers of this bubble, and they are the continuous buyers of these chips and the build out of these massive infrastructure plans. However, you look inside what these companies are actually building, they have a useful life. They're extending on these chips to 5 to 6 years out. Like I say, this is a great meme here from Harris Copperman, aka Copy. I'll put a link in the bottom of the comment section. You can read a great paper he wrote on this. But I just wanted to say, like, I'm a contributor.